Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hey everyone, looking at SPY on the daily and weekly time frame. Nice continuation from yesterday. Close up near the high of the day, indicated strength, and I was pointing out to members that we had very little resistance between 216 and 217, as that's where the gap was. So we went right through that. We filled the gap. Little bit of profit taking at the end of the day leaves us with essentially a doji, which shows indecision, which at the top of this little uptrend could have us looking for some consolidation tomorrow. The ideal hold would be a back test of this 50-day moving average it's going to be right about 216 tomorrow. Holding that level on the back test would show a lot of strength and likely give the confidence to the bulls to head to new all-time highs. So we've got the high of today as resistance, 217.53. Also looking back here at 218.12 before the all-time high up at 218.50. And again, remember, these levels are adjusted for the dividend. That's why I like Stockcharts.com. And so the all-time high in reality was 219.60, but with the price adjustment, breaking 218.50 will be the highest price. Well, can't say that. It won't be the highest price. It will be the highest adjusted level we've seen on SPY, and that may be a little bit confusing, but dividends are, and that's why I like stock charts, because it does all that work for me. The day after we had the dividend, we were close to breaking 212.50, which everybody would have thought that was a very key break of support. But in reality, with the price adjustment, that 212.50 became 211.43 key support. So in reality, breaking 218.50 will not be the highest price for SPY, but it will be the highest adjusted price. And I'm probably just raising a lot more questions than I'm answering. But let's get into it for the weekly time frame. The close above the 10-week moving average is very key and shows a lot of confidence. I was a little bit weary before today because we did have that resistance and we rejected from it last week on the bounce attempt. But a close above 216.02 on the weekly time frame tomorrow will gain that level back as support and be a really nice turnaround for the bulls. And again, with the reaction to the Fed and the lack of mention of December rates, we are going to look for new all-time highs in the market. So the question tomorrow will be, do we consolidate and bounce off the 50-day moving average support, which would show a lot of strength for the bulls, or do we make another attempt at 217.53 and head to the upside? And to get that question, you can be looking at oil. Correlation between oil and the market has been weaker than it has been in the past 2 weeks. But to look at that, you need to look at the dollar. There's all kinds of things you can be looking at as to what to expect overnight. So if you expect further consolidation in oil, you're likely going to see some further consolidation in the market. But again, that indecision candlestick after the gap up and run over the past 2 days does have me leaning more towards consolidation. But we do have all hourly moving averages as support. We are on the verge of a bearish MACD cross on the hourly, so I'm definitely watching for that to play out, which it likely will do after hours. But plenty of hourly, 5-minute, and daily support levels. If we do see consolidation, it will just be normal and healthy, favoring the bulls. So that's what we're looking at going into tomorrow to end the week. Clearly a victory on the week for the Fed bulls, or for the bulls due to the Fed. And I hope you have a great night.